Citadel Securities is going bankrupt right now. Today I want to talk about how and why Citadel is going bankrupt and how this is going to impact the AMC squeeze. Stay tuned and let's make some money. And now I want to dive straight in with the key information. So I want to start by talking about this article from the Financial Times that says Citadel Securities borrowed $600 million on Thursday to bolster its balance sheet. Now typically a balance sheet only needs bolstering or only needs supporting when it's failing, aka when a company is taking on giant losses and effectively needs a bailout. This is the company told lenders, which include credit funds, that it planned to use the $600 million in part for additional trading capital. aka saying that Citadel is effectively running low on trading capital, they're getting close to that margin call and they need additional cash. Now you may say, Tom, didn't Citadel's net trading revenue increase recently to $4 billion? Don't forget that net trading revenue is effectively fees directly received from their clients. When you look at profit, that's effectively those fees less their staff costs. Net trading revenues and EBITDA or their profits don't include unrealized losses on their investments because obviously they're unrealized, not realized gains and losses. Earlier this year, Ken Griffin also sold a $1.2 billion stake in his business to Sequoia and Paradigm to obviously again bolster his balance sheet because he was again running out of cash. You may say, Tom, how exactly did Citadel raise this money and what kind of credit rating does Citadel have? Now I found a very interesting but very contradictory statement at the bottom of this article from Moody's. Moody's said that Citadel Securities has a strong capital base, a profitable track record and solid risk management capabilities, which is very interesting considering that Moody's actually rates Citadel a Baa3. Now you may say, Tom, what is a Baa3? How does that compare to the S&P and the Fitch rating system? And what exactly is a Baa3? From this chart, we can see that Moody's Baa3 rating is effectively the same as a BBB-, or it's effectively lower medium grade debt, aka one step away from junk debt. Now that's really interesting considering that Citadel supposedly has solid risk management capabilities, but yet its debt rating is one step away from junk bonds. Now you may say, Tom, give us some examples of this top rated junk debt, aka Ba1 or Ba2 debt, for example. Well, Coinbase has just had their credit rating slashed from a BB+ to a BB, which is the same rating as a Ba1 or a Ba2. So Coinbase, that's been having recent liquidity issues, has been stopping customer withdrawals and is currently going through a crypto winter, has basically the same debt and credit rating that the massive Citadel Securities does. Coinbase is currently being investigated by the SEC, and we've seen many crypto exchanges over the last few months simply failing out of the blue, and Citadel Securities has the exact same credit rating, give or take, as Coinbase does. Bear in mind, Coinbase is also the same company that Jim Cramer liked up to $400 per share, but recently hit lows of around $50, falling 80% from its peak price. So we have Citadel Securities begging for $600 million to bolster their balance sheet. But why exactly may they need all of this money? Freecoin tweet is saying, why is nobody talking about this? He thinks it's likely that Citadel Securities has borrowed this $600 million to effectively meet margin requirements. Citadel is likely to be at the point where it is very close to a liquidation and it's begging for an extra $600 million to avoid that margin call for another few weeks. Maybe Citadel know the ape dividend would effectively cause the entire fund liquidation if they don't borrow this $600 million over the weekend. You may remember my video from a few days ago that spoke about Citadel recently losing at least $94 billion. $94 billion is just the change in their 13F filings, but obviously there's tons of different trades and different positions, like short positions and synthetic short positions, that aren't reported on 13Fs. Therefore, it's likely that Citadel has lost more than $94 billion over the last few months and is effectively begging for an extra $600 million just to keep it going for those few weeks longer. Guys, if you haven't already, be sure to sign up to Moomoo right now using the link in the description below. You can currently get 10 free stocks worth up to a whopping total of $25,000. Moomoo is very easy to use, it's incredibly customizable, they've got tons of technical indicators and advanced charting tools. From Moomoo's latest customer agreement, it states they do not benefit from your order flow and they do not sell your order flow to market makers like Citadel. Therefore, Moomoo is brilliant for buying those AMC and GameStop shares. From Citadel's recent 13F filings, it was also revealed that Citadel held 2.3 million shares in Bed Bath & Beyond, an increase of 5,675%. On top of that, Susquehanna also held shares in Bed Bath & Beyond, around 2 million shares for Susquehanna. But it wasn't just shares, it's also been revealed that Citadel and Susquehanna held 2.8 million and 2.4 million call options on Bed Bath & Beyond as well. Now obviously this is the Q2 filings, and therefore they held these 2 million shares and 2 million call options at the end of June at least, or at least added to their positions by the end of June. And if they were still holding on to that call option position, or they added to their call option position last week, they would have been down 40% on the day on Friday alone. If Citadel was buying more shares Monday, Tuesday and Wednesday when Bed Bath & Beyond was running but didn't sell them come Thursday and Friday, they would be down significantly. Millions of shares and millions of call options is effectively tens if not hundreds of millions of dollars that Citadel may have just lost over the last week. Now obviously if Citadel continues losing money and Citadel continues begging for cash to bolster its balance sheet, eventually their credit rating or their debt rating will be lowered to junk bonds or junk debt and effectively into default. Obviously when Citadel does go bankrupt and can no longer raise additional cash, it will be forced to sell off its long positions and forced to cover all of its shorts. Not just their legally disclosed shorts, but also their illegally created synthetic short positions as well. And obviously if Citadel closes out of hundreds of millions, if not billions of AMC shorts, it will indeed cause that AMC squeeze. Now I also wanted to quickly touch on the AMC APE dividend and talk about some users that have already received their dividend and can see these shares in their accounts. Casey Shrimple has reported that Computershare has already delivered his APE dividend and his APE shares are already visible in his account. I've also seen reports that Charles Schwab has delivered APE as well, but I'm sure that tons of other platforms haven't yet delivered these APE shares. As a prime example, as I'm based in the UK, Freetrade hasn't yet delivered my APE shares and I will be calling them Monday morning as soon as lines open to ensure that I receive my APE as soon as possible. If you haven't yet received your AMC APE dividend and your APE shares, be sure to contact your broker as soon as possible, whether it's by phone, by post, by email or by live chat, to ensure you receive your APE shares ASAP. At the same time, I also think it's worth filing a complaint to AMC's investor relations team and potentially the DTCC or Computershare as well. Bigham's tweeted saying, "I keep getting asked what to do if I don't have APE shares in my account. He says, step 1, call your broker." He said, "I've shown you all you can do on streams before APE comes out. Take pictures, print off your transaction history, email them and say you want them to send you a record." With another stock, CMKX, the brokers actually deleted conversation history and conversation records, and therefore be sure to receive a record of your complaint. We effectively don't want to give these brokers and trading platforms days and weeks to play past the parcel and hot potato with our limited number of APE shares. The longer these brokers and trading platforms have to play past the parcel means the less short sellers that need to close out of their positions. Short sellers can effectively continue to keep their synthetic short positions open while these brokers and trading platforms play past the parcel with these limited APE shares. A broker may receive a limited number of APE shares, give it to their customers holding legit AMC shares until they have a record of share receipt, and then effectively transfer those shares to other customers holding synthetic shares. If these trading platforms and brokers have tons and tons of time to continue transferring these exact same shares to multiple different accounts, then effectively these short sellers can continue holding their synthetic short positions. But obviously the less time we give these brokers and trading platforms and the more we chase them and follow up on the receipt of our shares, it means they have to force short sellers to close out of their short positions as they need to deliver the APE shares as soon as possible. Robinhood has obviously already received tons and tons of complaints, and that's why they've said by the 22nd they will have APE distributed and available to trade. That means these shorts working with Robinhood effectively have to close out of their synthetic short positions or find another broker willing to work with them and manipulate the few available APE shares they receive. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell because that way you'll be alerted when I upload a new video. Cheers.